Hello friends and welcome to another video by the Option School. This is your friend Pradeep Singla. So falling markets or rising markets, what is better for option sellers? So where from this question came, there is a friend who has recently started trading in options, and from last many days he was always praying and he was always under stress that okay, market should not go further down, market should not go below 15,000, and regular basis he is in touch with me and he is always talking whether it will fall further, whether it will fall further. So today what happened, today markets made a big decent up move. So in the evening when I talked to him, I asked him, are you happy today? He said no, now I'm stuck on the upside. So option selling obviously is a double-edged sword. If you are a non-directional trader, you do not want the market to really go down also, and you do not want the market to really go up also. So it's not whether market is going in one particular direction, it is basically something else. So if market really moves very fast on upside, that is also equally dangerous. So here I'm again talking about a non-directional trader, because for directional trader, if he has made a trade which will be beneficial for falling markets, he will be happy in falling markets. In case he has created a bullish trade which he will be happy in rising markets, so it was a good day for him. So main issue comes with the non-directional traders, because as a non-directional, I'm also a non-directional trader. As a non-directional trader, we are always playing a double-edged sword, right? We are trading a range of the market. Now, whenever market breaks the range, and it can be on the downside also, it can be on the upside also, obviously trader feels the pinch. Now here it's not a question of whether you are option buyer or option seller. When you're option buyer, obviously you want the market to be swinging like anything, right? If you're buying, if you're a non-directional option buyer. But if you are a non-directional option seller, because there can be a huge risks to your capital, so always you want that okay, market should be stable and it should trade in a range. So then it becomes a question whether you are able to keep your trades within the profitable range or not. Let me show you one very simple example. Now suppose this is the trade. Now in this trade, this is obviously an example of an iron condor. Now in this trade, if market falls below this level, then trader is under a little bit of pressure, although it's not an unlimited loss, but definitely there can be a limited loss. And if market goes up on beyond this, then also trader is under pressure. So what the trader wants, that okay, market should trade within this range. And obviously this is not a perpetual trade, right? It is required that okay, market should remain in a range for few days, maybe if it's a monthly trade, for almost a month, right? So whenever market breaks any of the points. Now today if you see, if market has gone on the upside, so the upper break even point has come pretty close to the existing level of the market. If market from here goes further by 100 200 points, obviously this trader will not be happy. And in case market goes slightly on the downside and it comes exactly in the middle of this profitable trade, then he will be happy. But again, if market keeps on drifting down further and breaks the downside range, so he is not happy. So a non-directional option trader has problems on both the sides. He can be stressed, the trade can be stressful if market sharply moves downside, and trade can be stressful if market sharply moves upside also. Now the big question is whether both the situations are same for option sellers, or is there any difference? Let us talk about that. Experience says it is not the direction, but the speed with which market moves is important. So if I have taken a range, let us say I've taken a range of 1000 points, which is my profitable range, that okay, if market remains within this 1000 points till expiry, then my setup will be profitable. But what happens that the way markets moves nowadays, it can cross those 1000 points maybe within 3-4 sessions, either on the upside or on the downside. So if it crosses is on the downside and the trader makes some adjustments so that he's increasing his range on the downside, and then suddenly market makes a reversal and now the trader feels stuck up on the upside. So if the speed of the market is very high, that okay, it is moving 300, 200, 300 points almost every day, that can be really troublesome. For this reason only, it is always advisable to have a very large green area. You need to trade for almost no less than 1500 to 2000 points of a range within which you are not required to do. Secondly, it all depends what kind of trades we have made. Are these trades like something which are very sensitive to the movements of the market, that okay, even if market moves by 100 points you have to do adjustments, then definitely this kind of markets uh, will definitely trouble the trader. But if those trades are not very sensitive to the movements of the market, which means that okay, even for 300 400 points I can still sit down in the trade and I am not risking any big capital, so I can definitely continue. So I am not required to do any adjustment even with 200 300 points. That means I can sit safely. One day market will go up, another day market will go down, but in case market keeps on moving in one direction, then only I need to do an adjustment. So those kind of trades are slightly better in these kind of markets. Now here again I'm making a statement: falling markets are slightly better than rising markets. I need your answers on this. Why I'm saying that falling markets are slightly better than rising markets. I'm giving you once again the context. The context is this is for non-directional traders who are primarily option sellers. Even for option buyers, falling markets are slightly better if they are non-directional option buyers. But if you're a non-directional option seller, falling markets are slightly better than rising markets. And all of you need to write it in the comment section why I'm saying that. I know many of you know the answer, so once you write the answer in the comment section, we will definitely reply to each and every uh, comment, and then we will give our own reply also, that okay, why falling markets are slightly better than rising markets. It's again a very fine difference. It's not that okay, you want markets to go down by thousands of points and then you feel happy, nothing like that. But still, if there is a choice that okay, whether you want the market to go up by 500 600 points in 2-3 sessions, or whether you want the market to go down by 500 600 points in 2-3 sessions, then for an option seller, definitely choice number 2, where you are saying that okay, let the market fall by 500 600 points in few sessions, that is always a better option. Let me see how many of you can answer this. I will be waiting for your answers. For any of our services you want to contact us at these numbers. Write to us at info@the option school. You can download our app. Android as well as iOS versions are available. Link is given in the description. Do not forget to click on the like button. Share this video to somebody whom you think it will be useful. I am waiting for comments from all of you. And if you have not subscribed to the channel, please go ahead and subscribe to the channel. We have brought in another good thing for our subscribers. Now, if you want to subscribe to Mint, Live Mint, which is a financial newspaper by Hindustan Times, you can get 25% discount if you follow the link given in the description. It's sometimes they really give a premium content which is very useful in the market. So go ahead and try that. If you find something some difficulty in that, please feel free to write it in the comment section. Thanks to all of you for watching, and we'll see you in the next video.